Multibagger Stocks. Hey, are you free?
Yes, I am.
Can you please tell me about Multibagger Stocks?
Yeah, I can. Come with me. The term multibagger is coined from two different words, multi, which means too many, and bagger, which means bags. The stocks which multiplies the money invested in it and give manifold returns are known as the multibagger stocks.
How can I identify multibagger stocks?
That's tough, but not impossible. You have to look for certain positive aspects. First, low debt level. If a company has to perform well, it is necessary for the company to have a very less amount of debt. The amount of debt should be less as compared to its assets. If a company has a less amount of debt to pay off, then it can focus more on the expansion of its business. If it has a large debt, it will be very difficult for a company to focus on its advancement. A large debt also has a bad effect on the company's expansion. The history of multibagger stocks has shown that low debt proves to be very helpful in producing a multibagger stock. Second, business model. It is really important to predict the future of a company before investing in it. It is advisable to invest in the stock of a company which has been noticing a favorable growth. The growth should be in demand of its products or services. One should not invest in the stock of a company which notices declination in demands of its goods and services. If a company deals in products or services which has the capability of performing good in future, then there is a possibility that the stocks of these companies will perform good in the coming future. So, for a stock to turn into multibagger stock, it is very important that the associated company performs good in future. Third, good performance in past. It is very difficult to leave the sins of your past behind. The same happens with a stock. If a stock has not shown a good performance in past, then it is very tough for it to perform extraordinarily well in the coming future. The company should be showing a healthy growth in its profit and revenue on a regular basis. The best way to analyze this is to go through the quarterly results of the company. Fourth, expansion. It is very important for a company to expand itself so that it can show an increase in its profit and revenues on a regular basis. A company should focus on introducing new products in the market to attract more and more customers. More is the number of customers, more is the profit associated to the company. With an increase in the customer base of a company, the profit associated to the company also increases. Fifth, EPS growth versus valuation. EPS stands for earnings per share. It means company's profit divided by the total number of stocks. The EPS of a stock should be reasonable. The valuation of a company should not make it a costly buy. If a company has already given manifold returns, then its valuations become pretty high. So, they may take some time to perform well again, after going through a healthy phase of correction. This is the reason why mostly all the stocks are from the mid-cap or the small-cap sector. So, the above-mentioned points should be kept in mind to identify a multibagger from the group of ordinary stocks. But it is not as easy as it seems to be. Identifying a multibagger stock is a very tough job. It requires a lot of hard and intelligent research. It's as tough as to pick the cherry from the cake, without spoiling the look of cake, but not impossible.
Well, yes, it is tough. But I hope I am able to identify some during my investment journey.
For more information, visit protradings.com.